Marci, does today highlight to you that we're not really going to see any major pullbacks more than 3, 4, 5% in the next couple of months?
Yeah, I mean, I think it would be expected to see a pullback, maybe 5% based on sentiment. It's come so far, really, since Election Day. But I think it's so important for investors to take a step back with the context of the big picture. We're still in the early innings of a new economic expansion. Our view is we're in a long-term secular bull market. We heard from Jay Powell today. It sounds like he still has his foot on the gas. So with that context, I would say equities over bonds, and I would be positioned in a barbell of innovation and cyclicality, like industries that are going to be most exposed to rising GDP, which I think we see this year and next.
Yeah, which we're seeing. Are you surprised, Anastasia, that the market didn't react more? I mean, we did see a turn after, both in bonds and stocks, after Powell did make it clear he was still dovish, not thinking about higher rates, not thinking about tapering asset purchases. But are you surprised that wasn't more of an impact today, given some of the concerns lately about higher rates?
Yeah, I think the market has been reacting for the last several weeks, really, because we have seen yields rise pretty significantly. We've seen some of the broader indices, kind of pause their performance, and we've seen some pretty distinct selling in some of the higher beta parts of the market. And so this is to be expected. Anytime you have a quick move in interest rates, the markets tend to react. But I will say that overall, the markets tend to respond positively to higher rates. And especially consider, why is it that the rates are rising? Rates are not rising because Jay Powell is about to hike rates. They're not rising because we have a Fed tapering asset purchases. That is what he said he's not going to do anytime soon. The rates are rising because we're vaccinating more and more people, and we're doing it faster than the consensus previously expected. So as a result, we have upgraded our GDP for this year significantly, as I think many others are starting to do across the street as well. So that's a good rise in interest rates.
Mike, on the topic of rates and what we heard from Powell today, we did see the long end tick up and then it sort of flattened out during the course of the session. How is credit reacting in light of that?
It's softened up just a little bit. Actually, in the morning especially, it was tracking stocks lower. So it looked as if maybe it was going to be a sympathetic move in credit, but it did firm up. So I don't think they're at necessarily alarming levels at all. In fact, credit spreads remain pretty tight. It's something, though, that I think you have to now have on the radar screen, because, yields are going up, as is totally true for the right reasons. But it also, when corporate bond prices go down, it's just one little marginal reduction in net liquidity. I wouldn't say it's really a real scary signal, but it's something to keep an eye on here.
Marci, you said that the outlook bodes well for the cyclical groups tied to the economic recovery and the low interest rates that we're going to continue to get. Which ones are your favorites?
Right now, we like financial. So I agree with Anastasia, rising rates, loan loss provisioning, which will roll off, I think, in the coming quarters, and share buybacks resuming, I think, all bode well for financials. We also like industrials. We've seen a lot of healing in the global industrial economy. You're seeing it in PMIs and manufacturing data around the world. I also like consumer discretionary. I think, as vaccinations accelerate, you're going to have, to borrow a term from my colleague, in the second half of this year, revenge and reunions, revenge spending on luxury goods, maybe while we've all been sitting home in yoga pants or sweatpants, and reunions, all the family we haven't seen, the trips we haven't taken. The consumer has a high savings rate. Household net worth ticked up to an all-time high despite the recession last year. There's a lot of demand for services, and I could see that playing out on progress on the health front.
Shepard Smith here. Thanks for watching CNBC on YouTube.